Okay, in today's video here today, I'm going to be summarizing my findings through my research of the EGLE Bulk Shipping Company. They deal with dry bulk shipping, which I'll explain in a couple seconds what that exactly means and how it affects their business model and why it has me bullish on their business model. But this video is not financial advice, simply my thoughts and opinions, but let's jump right into it here. Okay, so looking at their most recent investors report here, we see this is their product mix, and this is what dry bulk shipping is. So dry bulk shipping is pretty much materials in raw form, and you have a list here of what they believe the market for each of these materials will grow to be in the next year for 2022 and for the current year, or well, their current fiscal year of 2021, which is now coming to a close, as well as the previous years, right? So this is their product mix and what dry bulk is. So as we see inflation and increased demand for products in the market and supply issues being solved through the supply chain that we have right now, where there's some little bit shaky, but that's mostly between China and the US. So they're operating on a global scale, so they're still able to see demand growing, and they're able to capture that demand, and they have very high utilization rates on their shipping or cargoes right now, known as vessels, right? So when you're looking at a company like EGLE Bulk Shipping, you need to look at something called the Baltic Dry Index. So according to Investopedia, what the Baltic Dry Index is it's basically a shipping and trade index created by the London-based Baltic Exchange, which measures the cost of transporting various raw materials such as coal and steel, which are dry bulks. And basically what it does is it captures the pricing of the transports of more than 20 routes around the world, and basically is a leading indicator of how much these companies such as EGLE are charging for their shipping across the world. So it's definitely a leading indicator and something you need to look at and consider when you're investing in a company like EGLE. So when you look at the Baltic Index, it was really hot earlier in the year, but then now it's completely dropped off since October. It's taken a huge fall from 5,500 all the way down to about 1,700 now, right? But when you look at the company EGLE, then you look at their stock price chart. So I'll actually go right here. It is, even despite October since then, it's still traded sideways, right? Even when it continued rising the index from here to here, the stock pretty much took a dip and didn't really do much, right? But what I think we've really seen in this bull market here of the Baltic Index and pretty much the higher trading rates that they've been charging is now the company's been able to position themselves better, and they were able to restructure their debt, for example. So now a lot of their debt, or nearly entirety of their debt, is due 2026 under their new umbrella of a 5% interest rate of convertible debt that could be converted into shares, right? So that's possible. It would dilute shares, right? It would add another 3 million shares out of a total float of like 12 million, 13 million shares outstanding. That could hurt, right? But that could significantly help their balance sheet and potentially put them in a position to be debt-free or significantly less debt, right? So that's definitely another thing to keep an eye on long-term with this company. But it's a $300 million term loan, and then they have another $100 million in a credit revolving facility that they are able to utilize if necessary, whether it becomes to buying or selling more of their vessels for more or less production, that depending on the market segment, or the market measures at the time being. So that's definitely something interesting for the company. That, not to mention that they have $50 million towards a share repurchase program. That could help them buy about 1.25 million shares if we're looking at a valuation of $44.50. If the share price dips, they can buy back more shares because the share price would be lower, right? And one more thing about the Baltic Index, right? A lot of the reason it's kind of been falling here, right? I'm doing some research. It's looking at it here. It's talking about different rates and all, the different factors. But a big factor right now is China. So you're talking about China over here, but not the exact factor. But China, the factor is that the Olympics is coming. They want to have better air quality, right? So they're not trying to produce as much coal. They're not trying to ship as much coal. All of this industry does deal with a lot of pollution, although, not to mention, another thing with EGLE they're trying to do is work towards more biodegradable energy sources that they can utilize for their shipping vessels, right? And they also use something called scrubbers, which makes the fuel they utilize more cost efficient. So the company is trying to do innovative things, and when they come off a time period where the Baltic Index was much higher, they were charging much more. Now the company is able to better position itself for the future, right? And as rates start to rise again, as the Olympics pass and China begins to increase production, I could see this company significantly maintaining or increasing their dividend and share price, right? And when you go here and you look at the analysis, next year's estimates are in a very, very wide range, including the rest of this year for 2021. They have one more fiscal quarter they need to report for 2021, so that's why these estimates are still here. I'm sorry, yeah, see this quarter right here. It's the final one they're in right now. And then you have next quarter, March 2022, which is their first fiscal quarter of 2022. And you see sales growth right now is strong. For the next year, 5 years, it's estimated to be very strong, right? And looking at analyst price targets, not that that necessarily means anything. You should always do your own personal research. They have a wide range, but it's all above the current share price, right? And they just paid a $2 dividend. It's the first time the company's paid a dividend since, I believe, 2008 when rates were very high. And then after then, they did a lot of reverse splits. That's why if you look back here, you see a lot of crazy share price back here, like 300,000, 450, but that's the point. And you look at the PE, it's pretty favorable. They have a nice operating margin as well as profit margin. If you scroll down a little more here, we talked about that debt, how they just restructured that recently, and they have strong cash flows. And remember I said before about the short interest could squeeze a little bit. This isn't necessarily a squeeze play. I think it's more of a medium-term play, to be completely honest with you. If it went up to, let's say, $100 in about a year or two, I would probably have collected a couple dividends and the share price would appreciate over 100% in a little over a year's time or so. People paying long-term capital gains tax. I'm probably going to take profits on this one, but at the same time, if the market's a little of a rocky road, I'm comfortable holding the shares of this company because I could see them being able to continue to maintain themselves despite a rocky environment in the Baltic Exchange Index or, just in their business as a whole. But I like the diversification in their business and what they're able to do long term now that they've restructured their balance sheet a little bit and all that kinds of stuff that I was talking about before. But I still like the company long term, and I think I can collect some dividends along the way. So if need be, I'm willing to hold this company through dips or rocky market conditions. And I think it's a nice diversification play for the Tetron portfolio, which is why it's about 8 to 9% of our portfolio right now, and we very recently added it to our portfolio. So that's all for today. Again, not financial advice. My personal thoughts and opinions, just covering a little bit about my findings of the EGLE Bulk Shipping Company. So if you have any questions, comments, or concerns, please leave them below and drop a like and subscribe to Tetron Invest.